I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Air Canada's strike is over, and my travel plans are back on. But did it cost investors more than just delays? Air Canada's labor showdown may be over, but the fallout tells a bigger story about Canada's aviation market. The strike and lockout brought Canada's largest airline to a grinding halt, costing the company anywhere from 50 to 98 million in revenue every single day. At that burn rate, a 2-week standoff could have topped 1.4 billion in losses. Investors felt it too. Air Canada's stock slid more than 14% since early August, lagging US peers like Delta and Alaska, with shares tumbling nearly 3% in a single day as tensions escalated. The airline even pulled its earnings guidance for the year, underscoring just how disruptive the fight had become. But behind the numbers lies the bigger issue: Canada's airline duopoly. With limited competition, high fees, and weaker passenger protections, travelers had few alternatives, giving unions enormous leverage and forcing Ottawa to intervene. The strike may be settled, but the episode exposed just how fragile Canada's air travel system really is. Until foreign competition and stronger consumer protections enter the picture, Canadians are stuck paying high prices for limited choice, and shareholders are left exposed whenever labor disputes flare. Shopify is back on top of the TSX, edging past Royal Bank, if only for a moment, to reclaim the crown as Canada's most valuable company. If that feels familiar, it is. Shopify pulled the same move back in 2020, riding the pandemic e-commerce wave before crashing back down, shedding more than 70% over the next 2 years. And history hasn't been kind to RBC's challengers. Nortel, BlackBerry, Valiant, Barrick, Potash each took the throne, only to stumble soon after. RBC, on the other hand, has been the immovable anchor of Canadian markets. Steady, boring, and relentlessly profitable. That's why the old adage has stuck. Buy the monster, sell the flavors. But here's the twist. Shopify doesn't quite fit the old pattern anymore. Their latest run isn't just hype. It's been powered by a 470% rebound since 2022. This has been driven by record financial results and investor bets that its platform has real staying power in a digital economy that isn't slowing down. At its peak this week, Shopify was worth $269 billion, about $5 billion more than RBC, before slipping back below the bank as the week ended. So what's the takeaway? Maybe this time the flavor of the month has turned into the main course. Or maybe history is about to repeat itself all over again. Drop your thoughts in the comments. Rackla Metals is on a roll and is carving out a name in one of Canada's most promising gold belts. Rackla is a Canadian exploration company targeting mineralization on the southeastern part of a Tombstone Gold Belt in eastern Yukon and western Northwest Territories, a region already home to multi-million ounce deposits like Fort Knox, Eagle, Ormac, and Valley. They have strong technical and financial backing, discovery-focused leadership with a proven track record, and a strong treasury and a 49% insider ownership, which demonstrates management's confidence in this project. Rackla controls more than 59,000 hectares in this district-scale land package with multiple high-priority targets. Drilling is well underway, and with scale, strategy, and momentum in the core of the Tombstone Belt, Rackla is aiming to turn this land package into the next significant story in North America. Markets move fast. From strikes to stock swings, we break down the moves investors need to see. Follow Investor Breakout to stay ahead. Get next week's insights first and never get left behind. I'm Ryan Iverson. We'll see you next week.